Hello, everybody, and welcome. My name is Tom Lyons. I am responsible for communications and content here at GenTwo, and I am also the host of our global AMC Summit week. This week, I'd like to introduce our guest, Fernando Concha from Luma. Fernando, welcome.
Oh, thank you, Tom. Uh, how's everything? An
Everything's
exciting
fine.
week ahead. Exciting week ahead, right?
It's been an exciting week. It's a lot of stuff, but I'm having actually a pretty good time, I have to say.
Uh,
I think we're doing well so
as
far.
part of your week, we also have an event here in Miami. I'm in sunny Miami, where we are hosting our friends from Gen2 and a lot of the people in the industry later tonight,
That's great. Yeah,
where
I
we're
know
going to have
our CEO is there. Philip is there with you, and so
exactly where we'll continue talking about AMCs and the different structures we're going to talk about today.
excellent.
Yeah.
All right, cool. Then I think if let me get that link in the chat. One second. Okay, cool. All right. So Fernando, to start it off, why don't you introduce yourself, your role at Luma, talk about Luma as well, and sort of get this set the scene that way.
Awesome. Well, my name is Fernando Concha. I am global director of capital market sales at Luma Financial Technologies. Originally, I got started in Luma 6 years ago when I launched the Latin American channel, and which has done extremely well in the past 6 years. And recently, I've taken more of a global role as a result of the success we've had in the Americas, and in order to bring and try to continue the internationalization of Luma. And what is Luma? So Luma, it's a fintech financial technology platform. The name says it, Luma Financial Technologies, and it's mainly a platform for the trading, management, distribution of financial derivatives, such as structured notes, which was our core product, over-the-counter derivatives, which is what we're doing right now, annuities in the United States, and life insurance. So that is where we focus on, and where we call our expertise are these non-vanilla financial products, derivatives, where we can really add value with our analytics by simplifying the life of people in all of their aspects. So we try to touch every pain point in the structure of all of these products, from pricing, distribution, management, operations, analytics, and any of the things that might make these products be hard to sell or to explain to clients, right? That is a little bit of the objective. So kind of our mission. And Luma right now has offices since our headquarters is in Cincinnati, Ohio. And we got offices in Miami, Zurich, New York, where I'm based, and Lisbon. And also have a presence in Sao Paulo, Brazil. So as you can see, very global presence. And what we're trying to do is help our clients to have a global mandate to support them in all of their geographies.
Fantastic.
Any other questions on that?
No, it sounds great. Just also, it's great for us to be able to count you as a partner here at GenTwo, and I think we'll get back to that. We'll get back to that as well towards the end of the webinar. No, let's jump right into it. So we titled this session AMCs in the American markets, AMCs and the American markets. So we're talking about all of the Americas, and there's a reason for that, which we'll get to. So let's start off with the place near to my heart, my home country, the U.S. You know, what is the situation with actively management certificates in the United States?
All right. Well, I mean, if we're being honest, AMCs are not very practical in the United States. I wouldn't call them illegal from a legal perspective, but not very practical because of some things we can get into right now, both from a tax perspective as well as a registration perspective.
Yeah, could you elaborate?
of course. So what is the situation with AMCs in the United States? The problem is that any certificate that needs, there's two ways around it. One is that any certificate that is sold to a US person has to be registered, have a registration shelf, or be issued under a 382 exception, which is by the financial banks. So by all accounts, SPVs that are special purpose vehicles that are completely off balance sheet would need to be registered every time and have a registration shelf. And that is practically impossible. You're not going to register a product, a shelf for every AMC you're generating. And as such, it cannot be bought by US persons when it's an offshore balance sheet. There is some way that you can do this if a bank issues an AMCs, but normally when a bank issues an AMC, you are taking counterparty risk from the bank. It's more like a total return swap, an obligation from the bank, rather than a completely off-balance sheet AMC where you have no contamination mechanism that the bank could put on you. So by all accounts, you can do AMCs issued by common United States banks, by UBS or Europeans, UBS, Morgan Stanley, and whatnot, but they tend to be under this 382 shelf. And as such, for the most part, even though there are mechanisms to kind of ring fence the contamination mechanism, you're taking counterparty risk. So that's regarding regulation and why it hasn't been adopted properly in the United States. But then we have a problem with taxes. And this is pretty much this is a reaction. Back in the early 2000s, some hedge fund managers, in particularly one very famous who has let's call it a sitcom, a show inspired on him that starts with a B, went in and started using derivatives and certificates to replicate the hedge fund returns. Why is that? So that the Section K, which is the K ones, which pretty much regulates that any short-term capital gains and incomes are taxed at the individual investor level, would not be taxed. They would accumulate in the net asset value of the certificate or total return swap, and thus you are pretty much not taking capital gain taxes or capital or losses and all that at the moment it occurs, but you delay them in time. And the United States, the IRS got caught wind of this and pretty much brought up a law called Section 1260, which pretty much says now these, even if it's in a derivatives format, in a notes format, this will be taxed. The taxation goes to the individual level, and they really started enforcing it in the early 2000s, pretty much taking away the tax advantage that having an AMC has in other jurisdictions.
Okay, and if you look ahead, do you see any realistic path in the future to AMCs becoming viable as they are for US persons?
Sorry, could you repeat that? You cut off a little bit.
Do you see any realistic path for AMCs becoming viable for US persons in the future?
Is it me or?
So it looks like I'm doing okay.
Oh, I'm sorry. Okay, let me take some
Can you hear me?
out. I can.
Oh, okay.
All right, let's go back. I think now my internet's stable. So a realistic path to AMCs becoming viable for US persons. What can I say? We are looking into it, even with our friends from GenTwo, right? Yeah. I believe definitely like the dynamic of a registered shelf for the vehicles, it could be done if it's a setup where, let's say, the two pretty much instead registers a shelf for a particular omnibus kind of dynamic in the United States, right? It could be, and as I mentioned, through the banks could do it under their 382 shelf, right? But I think most people are interested on the tax purpose of, and I think that's what needs to to be addressed, and we got our lawyers working on it for now. That doesn't mean that the structure itself is not useful. It's very useful in other parts of the Americas, but for the United States, we all have to wait a bit until we hash those things out.
Okay, well, great. I'm glad you brought up the other parts of the Americas, because as we all well know, the United States is not all of the Americas. There's a bunch of stuff in the north and a whole bunch of stuff down south, Central America and South America. And as I understand it, that is quite a different proposition in terms of AMCs. So maybe you want to give us a bit of your take and of what the appetite is for AMCs in Latin America right now.
Totally. So we've seen a lot of appetite. For a couple of years now, it was in vogue, right? But as of late, we actually did a roadshow not that long ago, visited a lot of our clients, and we found a lot of opportunities in a very diverse areas. A lot of them have different reasons why they want to do an AMC, but the appetite is looking very good, and we're going to get into the cases that we've seen so far. And there's no more better proof from that today in our event, which is an AMC focus event where we'll have Philip, your CEO from GenTwo, right, and a couple of other partners that are going to be in a panel. We have over 24 wealth management entities in the Miami area attending because of this. So the appetite is there.
And
do you want me to?
Yeah, I was going to say we talked about this in the prep call, but are there any specific advantages for Latin Americans for offshore assets
Sure.
being in an EMC?
Sure. So I mean, let's put up on the basics of it, right?
Okay.
And then I will go to talk about the use cases, because one thing is the use cases that you want to solve through an AMC, right? And let's go back a little bit before. So what is an AMC, right? An actively managed certificates is simply a certificate similar to a structured note that has an ISIN, right? Which is and that means it can be custodied by Euroclear, right? The same custodians as do international bonds, for example, or in the case of the United States, QSIPs, right? It would be if you doing a 382 shelf or whatnot, and a QSIP that can be custodied by DTC. So it becomes a certificate issued by this special purpose vehicle, where the economics of the certificate are 100% collateralized or backed by the net asset value of the SPV. That is pretty much it. So what you're taking this is you're making something that is an account, if you would, that could have any types of assets inside of it. You're making it a certificate that can be custodied with anyone who custodies with Euroclear, or in the case of the United States, DTCC, right? And that has a lot of advantages, starting with the fact that you could have it on your Merrill Lynch or UBS account. And for anyone who's ever bought a hedge fund participation or a private equity participation or a real estate participation, usually you have that asset outside of your main accounts, your Interactive Broker accounts, your Pershing accounts, your StoneX accounts, right? Why? Because they're not certificates, they're not securities, and are kept in maybe all funds could have it, and that gives you a little bit more of distribution, but it's not on your, let's call it, bankable assets account. So what you're essentially doing is you're taking a non-bankable asset and making it a securitized bankable asset. And believe it or not, a lot of people are hesitant on buying things that they cannot keep on their Pershing account or in their Interactive Broker account or their Merrill Lynch account. So you are giving more access to people. If you want to go ahead and sell a strategy, they might be more inclined to buy an AMC, which is an OTC transaction, rather than investing directly into a Cayman or Delaware or Jersey fund that is completely not connected or isolated from your own bank accounts. That's one. So that helps on distribution from my end, from what I understand. The second reason is tax purposes. The same reason as it's in the NAV in the United States, it has its issues. In other jurisdictions, rule subchapter K1 doesn't exist, which so you don't get a K1 when you invest in hedge funds or whatnot. And the certificates are considered pretty much a security that goes up in value as the net asset value of the certificate goes up, and you are not taxed until you actually sell that asset, right?
Right.
And also you could bid, for example, in the case of, it's very common in Argentina where income, distribution of interest are taxed at a higher rate than capital gain taxes. So all of the income goes into the NAV from bonds and whatnot, but then when you sell the product, you're setting it's taxed at a capital gains level. So it's a way to also have some tax advantages in different jurisdictions, as I just mentioned. Then this applies to Chile, to Argentina, to Peru, and so on. Of course, everyone has its nuances, but it tends to be that capital gains taxes are better treated, right, than direct income.
Right.
And this is a way in which you can transform income taxes into capital gains taxes, among other things. So that is the let's call it the functional aspects of an AMC versus even putting a fund, if you solve it.
Okay, but what about comparing this to a separately managed account, to an SMA? What are the sort of differences, or how do these things compare?
Great question. I mean, and I think we got to go back into the use cases before that, right? Because and that's not one of the what I identified. There are like 4 main use cases for AMCs. The reason why a person might want to buy an AMC, right? Sorry, why an asset manager would like to issue an AMC.
An AMC, right?
And let's start with the first one, right? Which is pretty much you want to manage your own strategy, right?
Right.
Well, and that is you want to go ahead, have, let's call it, or a client of yours wants to have a strategy with ETFs, bonds, notes, and whatnot, and wants you to manage that strategy. That is really what a separate managed account is, right? An SMA. The difference is that in an SMA, and that's the first one of them, which imagine creating mini hedge funds, right? Which is the first case. This is where the difference between an SMA and an AMC starts, is that in an SMA, you actually have an account, be that a Merrill Lynch or whatnot, and you actually buy the assets, right? You're buying the underlying assets on it. And with that, we have the difference is here, you're buying in an AMC, you're buying the assets in an SPV, while in the other one, you're buying an asset under your own account. And as we just mentioned, there's tax differences among those things, right?
Right.
I would say that would be like the main difference. And also, there are some companies that do provide the technology to most efficiently operate SMAs. So imagine you have one strategy for 10 or 15 of your clients, right? And all of them you have in an SMA. When you need to rebalance that strategy, you need to go ahead and buy and sell for each account. And though there are some companies that will allow you to buy in bulk, the big, let's call it the $10 million of rebalancing, and separate into the 100,000, 1 million for each of your accounts that you have, or 700, right? There are solutions like that, but for the most part, you have to also go one by one, and that could create a slippage in the SMAs of each account because you're getting at different prices, right? In an AMC, you could have the same 15 people, 15 families, just be a part of the certificate, and you buy the complete $10 million worth of notes when you're rebalancing $10 million worth of assets, sell 10 million, buy another 10 million of something else when you rebalance it, and all of them have the same net asset value, right? And there's no slippage between the theoretical value of your strategy and your real value of the net asset value of the product. Was that clear, or did I go too much?
That was very clear for me. We'll see in the questions if it's not clear for everybody else. But no, also we talked about this obviously in our preparatory call. So I mean, that's also I mean, being able to do your own strategies and to sort of consolidate it all into one node and sell it off. That's a big talking point for AMCs generally. I find that's also one thing we talk about here in Switzerland and with our clients, that you can manage this. You can have this active strategy in a very easy way, and also because it's a bankable certificate, then you don't have to worry yourself about the KYC and the AML, because the bank's doing that for you. So from that perspective, as an issuer, there are just tons of advantages. It can be done cheaply. It can be done much quicker than a fund, and at lower at the lower minimum values, right? You can also have lower tickets.
That's a great point. I'm for picking those up. And the KYC is key, because the KYC is done by the broker dealer who has the account, the client's account. It doesn't have to be done by the manager. So it's hugely more advantageous than if you do on a fund status, where the manager is the one responsible for the KYC. Exactly. And the ticket sizes are also a big portion of it, right? You can buy $20,000 worth of it, $50,000 worth of it, not have to be $1 million worth of it, which are the other reasons why people do this, right? And of the 4 cases that we discussed ahead of this call.
Exactly. Great. So that's case number 1, which is from estimate. So the second case that we want to discuss has to do with I believe with jurisdictions, right? So
that is correct.
What's that one?
Okay, perfect. So that's pretty much there are some, and this has been done both in Brazil, Peru, even Chile, where in order to, for example, I'm just going to put a basic example. You have an account as something that a Brazilian entity, that replicates a set of Brazilian assets, right? And let's call it tactical Brazil equities, right? And those things are done at B3, Bovespa, and you can extrapolate this to any of the jurisdictions, to Chile or Peru or whatnot. In order for you as a person to have exposure to those assets, you have to go ahead and open an account in Brazil, right?
Right.
And even if you want to buy the 3G Brazil fund that's listed in Bovespa, you need to have an account in Brazil. Isn't it easier to just get an SPV in Cayman or Guernsey, which is where GenTwo does? That person is the one that entity is the one that opens up the account in Brazil, buys the assets, issues a certificate in the offshore market, and then you can own the economical exposure to that dynamic, buying it in your traditional international account, such as Pershing or StoneX or Merrill or UBS or Citi or any private bank. So what you just did there is you're just changing the ability to buy something in a different jurisdiction that you couldn't buy, and all of the costs that implies, right? We've seen this for the Peruvian market being done through Peruvian equities. There is some appetite to do it in Chile, right? For funds that are pretty much buying Chilean assets in Chilean pesos, and people might want to hold them outside in their international accounts rather than opening an account in Chile. We've seen this as I mentioned, in Brazil as well. But at the end is a way to make assets accessible in a jurisdiction where otherwise it would be impossible for you to do it. Well, I would say that's case number 2. And we've seen, like, in all the different types of asset classes, people have been doing this.
Okay, that's very interesting. And it also makes a lot of sense. Moving to case number 3, or anything you wanted to add?
No.
That's good.
No.
Okay, cool. Good.
If you want, I can go through the cases rather than, but So
Well, yeah, if you have some examples, I'm a big fan.
yeah, we're going to pick some. But the third one
Okay,
is that what we pretty much already discussed, which is the tax structure, which is
right.
particularly converting income into capital income, which is ordinary taxes, ordinary income, into capital gains taxes, right? And deferring the taxes. That's what we discussed beforehand, and in the conversation of why the U.S. we cannot do it, and why this is separate to an SMA. So I think we already covered the third one, but the fourth one is the one we're getting a lot of appetite, huge appetite.
Tell us.
We've been approached, which is making illiquid and non-bankable assets bankable. And in this case, we've seen from everything that you can imagine, from people who want to, and this is something that already happened, finance the acquisition of, and this is a GenTwo operation, finance the acquisition of real estate, to buy real estate in Paraguay, right? And literally what they did was the IC, the certificate was, they call it a credit link note, but it's different in the terms of structure notes, more or less call it a securitized loan, where the IC in itself is a loan, right? A bond that is paid, is bought by, whoever in the international dynamics, right? And that money, that IC, pretty much the SPV, what it does is it lends the money to the Paraguayan entity to buy the real estate. And it works the same way as any kind of mortgage. The Paraguayan entity pays the SPV the rates, and then the economic aspect of the rate flows to the economic, benefit of the loan flows to the loan holders, right? Which are the owners of the certificate of the AMC, of the IC, right? So what you just did there is you pretty much financed an operation in Paraguay to buy real estate in the form of bond, which is impossible to do as a natural person, if you would, in a very efficient manner with funds that are outside of the country. That's an operation GenTwo did not that long ago, all right?
Right.
They call it CNI. Other ones, I've been approached to get private equity, directly private equity into this, right? So pretty much people who want to buy again in Argentina or Brazil, they want to buy, first, they want to create a private equity fund, and it's cheaper to do it in a AMC certificate dynamic than actually creating the whole fund in Delaware or in Ireland or in Luxembourg, and all of the things that we already discussed about, right? But also what we've been seeing is people want to buy a particular, an asset manager wants to offer exposure to Apollo's vintage 17 fund. And rather than putting each individual client in it, you use the AMC as a feeder fund. Feeder funds are very common in Latin America. A lot of people have it. They have their tax advantages in certain jurisdictions. But here is, instead of creating a standalone feeder fund, the economic purchase of this private equity fund is done by this special purpose vehicle, by SPV, and then you issue the certificates, 100% collateralized by those assets, and that way people can come in with $20,000, $30,000, $50,000. And also you can input distribution fees for the sales force, for people who are your internal people who are selling this product and distributing the product. You can incorporate those fees into the actively managed certificate so that they get paid as well. So we've seen from real estate, as I just mentioned, in a loan format, private equity as a way to raise funds to buy real assets. We've seen it as ways to convert private equity and private credit investments, funds, third-party funds, like pretty much you are creating a tracker a tracker of these mega funds that you can package it into an AMC. And I mean, those are kind of like the cases that we've been seeing, which is turning non-bankable assets into bankable operations. And the appetite is humongous, and everybody wants to do it. There was one in Peru that people want to, and they did it, get a company, a private owned company, to sell a portion of the private owned company into this actively managed into the SPV. So there's an actual selling of it. So the SPV buys this a portion of this private owned company, of course, not the majority. They pretty much almost as if you listed 30% of it. And then the people who would buy, who wanted to have the exposure to that economic value without having the voting power. So it's a way to get liquidity on your private equity, on your private company, not losing voting power from the main shareholder, but having the economic benefits. So they pretty much, it's not listed, but they sold to the SPV, and the SPV then sold portions of the certificates in smaller amounts to different investors. So you pretty much listed, if you would, or open up the company to different investors without having to do all of the listing or losing economic power. So we've seen lots of different ways to make this efficient.
No, exactly. And that aspect, making the non-bankables bankable, is also a large part of our business. We do a lot of. I've seen all those use cases that you talked about. We've seen obviously here at GenTwo as well. It's great for creative kind of financings and the private debt and private all the private market stuff. We see a lot of that. Also the exotic assets, right? So paintings and wine and uranium. We have a big product on uranium, carbon credits, all these things, and it's an extremely good instrument for those kinds of things, for all of the reasons that you mentioned before as well. But if I'm not mistaken, you have a fifth use case that you've been very keen on. That's sort of more of a well, you tell us. It's something that you guys are very much looking at the moment.
Totally. So our fifth case, it's something of our own nature, let's say, which is, so we've identified, we deal a lot in the world of structured notes, right? And structured notes are a type of asset which is, I think, very good. It's a type of asset that should be in every investor's asset allocation. And for the most part, it's a product that is sold by certain investors, right? What is one of the problems with those structured notes in general? And also, let me go back one moment. Right now, when you have 2 or 3 years of the market giving double-digit returns, and if we believe on the concept of mean reversion, of returns, that party cannot go on forever, even though it has gone for a couple of years. So that's the moment when structured notes payoffs become much better for your portfolio, have a much better risk-return ratio, right, than traditional Delta One equities, right? So perfect, setting that up, great. But the problem is people don't know about it, or they don't. The same way someone will never go ahead and invest directly into I don't know, an ophthalmology clinic in Long Island, right?
Yeah.
Because there are not enough ophthalmologists, right? But yet they do when it's in a private equity vehicle, when it's in an active strategy managed by a third party, right? Structured notes, they get called, they get redeemed. They sometimes go into bad moments. There's a big secondaries market of structured notes where you can find things that are being sold cents on the dollar, that in a moment of stress, a good manager could benefit of it. So what we decided was as a partnership that the market needed a vehicle to invest in the structured notes asset class by not managed by the investor itself or the advisor themselves, but by a professional manager. And thanks to that, we launched with a Chicago-based company who has done this strategy for over 10 years, and they have 5 years of actual documented track record on this, based out of Chicago. It's called Invictus, is a company, Invictus Collective, which they will partake on the panel that we have today in Miami, right?
Okay.
And we partnered with them, well, pretty much helped them up. It's GenTwo, Luma for distribution, and Invictus, to replicate the same strategy that they have been conducting in the United States for their separate managed accounts, right? For all of their investors, where they have, I believe it's at this point, they're doing about they have like $1 billion in AUM under these strategies. And where the client does not buy a single note, they buy this strategy. They've called it first principle, because the first principle is not losing money. That is their first principle.
Good.
All right. First principle is not losing money, and that's what they're doing. And what is the idea behind this? Is this giving structured notes exposure in a actively managed in a managed strategy approach through an actively managed certificate. And that one, the subscription period is happening. We have had a very good, let's call it a reception by different wealth managers. And the beauty of it is that you can buy that strategy, buy that exposure, forget about if something gets called, matured, what you reinvested in. They'll do it all for you, and you can keep it in your own Pershing account under La Raíz Vial in Chile, or in or Criteria in Uruguay under your StoneX account, or your Merrill Lynch account, because it's, again, a securitized, it's a certificate, a security that's transferable.
Exactly. Yeah.
Well, yeah, interesting a lot.
Well, good luck.
Thank you.
No, that's obviously a very interesting use case, because I think we're seeing have discussions on things like that as well over here. So we're getting towards the end, Fernando. I'd like to encourage people, if they have questions, to use the Q&A function. We have 2 questions in there. I'd like to get to them all. I'm not sure we're going to be able to do the first one, but we can give it a shot. But before we get to that, maybe you could talk a little bit about the partnership between Luma and GenTwo. We announced that the second half of last year. So how did this come about, and what's your take on it?
Sure. So GenTwo has been on the radar from us for a long time. I actually spoke to Patrick, let's say
our founder,
our founder. I'm thinking 4 years ago, 3 years ago or so.
Okay.
Because we were working with a very knowledgeable big asset manager in order to pretty much try to securitize some of their managed strategies. So same use logic, we wanted to improve the distribution for them. So I went in and looked at every provider of AMCs out there, or they all have different names. Some people call it actively managed certificates, other exchange traded products, but at the end, a vehicle that can issue as security, and it's completely through an SPV that's completely isolated and cannot be contaminated by other people using the vehicle. So that there is no credit risk whatsoever, right? And doing my research, I spoke with 13. We looked at the banks. The banks. I don't mind the banks buying bank issued AMCs. UBS is a big player. Credit Suisse used to be a huge one. But the problem is what happened when Credit Suisse went bust. At the end, UBS honored all of the debt, but if you weren't even though you were investing in private credit or in private equity in whatever you were invested technically in POSCO in Korea, you would have lost money, right? So the first thing is we discarded at that point in that particular aspect, that because it wasn't correct for this particular strategy. Yet I do think some people like it, and I think it's completely a valuable alternative to buy AMC issued by banks, but it wasn't the right fit for that particular strategy. We looked at everything, and my conclusion was GenTwo was the best one on a quality basis. Not the cheapest, but the quality was good, and that's kind of how came up with the name. We had to shelve that project because of internal dynamics in Luma, priorities. But when it's starting flaring up through other partnerships, GenTwo was the obvious choice as a result that we had already done all of the research and thought that our clients would like quality rather than quantity.
Okay, well,
and
fine. We'll take it.
Yeah. No, but it's great. And yeah, and that's why we started when we decided to go to sponsor this defined outcomes actively managed certificates, what we just discussed about using AMCs for structured notes payment. GenTwo was our partner, like the one we chose. And we did conduct some integration on the tech side. So you can create an AMC directly to the Luma platform. If you have an AMC issued, you can distribute it through the Luma platform as well. And at the end, since these are all structured notes and everything, you can also, every AMC of these products that you have, you can also visualize it in our life cycles. We have some technical integration with GenTwo as well.
Okay, fantastic. Fernando, I'm going to ask you one last question, and then we're going to turn it to the audience questions. And it's basically the look ahead, crystal ball, road ahead question. So, if you look down the road, I actually want to start with the different parts of this. So first of all, as great as everything has been that we've been talking about so far, do you see also any limitations of the AMCs as they are today, especially in the American markets?
Yes, I do, and especially on the same strategy that I wanted to do originally, which is for managed strategies, like having an open fund. The big problem is the AMCs are great for when you already have $10 million to invest in. You have your own strategy, you put the money up front, you have the subscription period that comes in, it's very economical. To issue an ISIN is $3,000, right? Very, very cheap. When we have problems is when you want to have, let's call it an open subscription AMC. Meaning, right now I went in, we raised $1 million for this strategy on structured notes that I mentioned, or on ETFs. I could have all of my optimal portfolio created on ETFs, right? Because I'm following someone. I could take and create my own portfolio that replicates Berkshire Hathaway's in public investment from their, coming from their K10s,
right.
The ones that you get in Whale Wisdom. So I forgot about where you can see exactly what they invested in. You can replicate that. Perfect. So imagine you call it your Berkshire Hathaway investment portfolio for your clients. The thing is, you first raise $1 million. This thing gets construction. Another client comes in and wants to put another 500,000. If you have that subscription period over, and you need to invest as a secondary transaction, the secondary fees are too high from ISIN. And that's a problem of the paying agent, also the issuers. And so it's worth your while within the math that if you have extra 600,000 over $600,000, it's worth more to just create a new ISIN within that same SPV, which is kind of inefficient. because a new ISIN would mean a new NAV. And yeah, some people might want new NAV, but it would be much better if you could subscribe people to the same exact fund. So I think that's non-practical for open-ended strategies, which I think is one of the main things that we want to address with actively managed certificates, is to replicate funds economics. And yeah, and I think fees have to go down there for sure. I mean, Philip said that fees were coming down in the SRP conference and that we had in London, right, a couple of weeks ago.
Yeah.
So, I mean, if GenTwo is going to take the lead on that, I think we address that part. I think that the acceptance will be much better. And otherwise, we can always go through, tokenization, right? If the problem is the paying agents, right, and all that, you could always go ahead and tokenize this product. Then again, the problem is if it's not, that means you're taking out the custodian part from your Merrill or UBS account, your Pershing account, your StoneX, your Citibank account, because you're tokenizing it. So yeah, maybe you gain some advantages from the paying agent, the secondary market side, but you lose the good part of having this same product in your brokerage account, right? So one for the other. We'll see what wins.
Okay, cool. Yeah, I'm glad you mentioned tokenization. That's the question that that comes up all the time. I've been avoiding the AI question, but you can't avoid the tokenization one in what you've been doing. All right, look, we have 5 minutes left. I want to go through these questions because I think that's the Q&A here, because I think that's a bit of our duty to do to the extent that we can. We'll have to see.
Of course.
But you said you're a brave soul, so we'll give it a go. Question number one came in from an anonymous attendee. Is it possible to sell a Swiss AMC to an American client based in Switzerland? I don't know if that's even in your area.
But no, the answer is no, because a U.S. person is defined as a resident of the United States or a U.S. national. So if you want to sell anything to a U.S. national outside of the United States, it's the same thing. You have to do it through a registered shelf or a 382 exemption. So yeah, maybe a Morgan Stanley issued AMC through their registered shelf, you could, but not an SPV as the one that we're discussing from GenTwo.
Okay. You know, as a U.S. person myself, I have a bit of an idea of how that works. Going back to LATAM, which Latin American countries, in which Latin American countries are AMCs particularly popular? I think we talked about this, but if you want to go back there.
I would say it's Uruguay/Argentina. Very, very, because a lot of the Argentina money is there. I think that's where it's extremely popular. We are having interest in Colombia. There is interest in Panama, but I would say Uruguay, because it concentrates a lot of that kind of money, and Panama are the most ones. But also here in like out of Miami, there's a lot of people who are buying AMCs. In Brazil, I know for a fact that the biggest banks in Brazil have, AMCs for their clients. So I'm not going to name them, but you can guess 2, 3, which are Luma clients. You know, the top banks in Brazil, they do AMCs for the client, but for their offshore clients. But if we would say just one country, we would say Uruguay and Panama.
Okay, cool. Since AMCs usually need regular pricing, daily, weekly, monthly, is valuation policy based on mark to model for private assets and or through independent valuation agents?
Ooh, great question. So GenTwo is the one who would do that part of net asset value. Ideally, you would want to get it from, if it's a private equity, and this is my understanding, Tom, you might know it better, but you'll take the net asset value projected by the entity, by Apollo, if it's Apollo. If it's a public security, of course, that is transparent. We got the mark to markets and the pricing directly. If it's something like real estate in Argentina, pretty much, of course, the portfolio manager is the one that has to report it. The people at the AMC, the directors might want to have an independent valuation agent doing it for them. So I think there's caveats to that, depending on how public the mark-to-market model information is, who is the person describing it, and mainly remember that the owner of the SPV I mean, they have directors, independent directors, based out of Guernsey, right? And you have to convince them that that's a correct valuation. Otherwise, they might contest it.
Yeah. No, exactly. I mean, as far as I understand, and on our side, we don't do any evaluation ourselves. It's always an outside source, and an independent source. Okay, I'm going to combine the next two questions because they're for you specifically on distribution. So you say that one of Luma's services is distribution. Can you source investors to my asset-backed AMCs? Yielding 6 to 8 APR. Okay, what is the cost of distribution? And the other question is, when you say AMCs can be distributed through your platform, what exactly does the platform offer besides showcasing the AMC? Do you provide access to investors, asset managers? Does your platform directly allow OTC trading?
Okay, great. So dynamic. I would love to say yes to all of them. I don't know where they're right now. Right now, we are on the defined outcome structure notes. That's because that's where we can also add value in the life cycle manager part of the company. But we'll get to that, and we can discuss cost of distribution later on. Unfortunately, right now we cannot. We're just defining it to this defined outcomes AMCs, but we have a huge reach, at least in the region. We are by volume the biggest platform in Latin America by far, and by reach, I would say as well. As people will see in our event today, we literally our tentacles are across Latin America in a good way, I say. So yes, if you would post a product in Luma, you would have a lot of eyeballs on them, right? And but unfortunately, right now we are keeping it to defined outcome AMCs. That will change in the future for sure. And does the platform directly allow OTC trading? It does. It does. We have mainly callable swaps and non-deliverable forwards that can be purchased through the platform apart from structure notes.
Okay, great. Well, Fernando, look, we've actually hit time already. We're already a minute over, so I'm gonna unfortunately have to stop it there. I really want to thank you for coming on, for taking your time out from your busy day in Miami and joining us. It's been a great session. It just seems to be going from highlight to highlight here, at least from my opinion. This is a real fun one. So thanks very much.
Thank you so much, Tom. Thank you for having me. And it's always a pleasure. I love to talk for people who have heard me before.
And
it was a great conversation.
and you're quite good at it. Okay, so goodbye, everybody. As mentioned, this video will be posted, and there'll be a report about it. So you'll get all the information there. And if you do have more specific questions, I encourage you to sign up for tomorrow's session with ISP or the masterclass on Thursday, and hopefully we can get to some of those there as well. So goodbye, everyone.
Goodbye. Thank you so much.